Ladies and gentlemen, good day and welcome to the Frog Cellsat Ltd Q1 and FY25 earnings conference call hosted by Ventura Securities Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company and it may involve risks and uncertainties that are difficult to predict. I would now like to hand the conference over to Tushar from Ventura Securities Ltd. Thank you and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities Ltd, I welcome you all to Frog Cellsat Ltd Q1 and FY21 earnings conference call. The company is today represented by Mr. Konark Trivedi, Managing Director, and Mr. Charanjit Kalra, Chief Financial Officer of the company. I would now like to hand over the call to Mr. Trivedi for his opening remarks. Thank you and over to you, sir.
Good evening, everyone. Thank you for joining us today for this conference call. I, along with our CFO, Mr. C.J. Kalra, welcome you all to our Q1 financial year 25 earnings call. Today, we have gathered to discuss the journey of Frog Cellsat Ltd, vision for the future, and the key drivers that have propelled us to success. As you know, FCL is a growing company, and we have been in the industry for more than 20 years. From humble beginnings, we have evolved into a leading design house and manufacturer of radio frequency equipment, catering to the diverse needs of mobile networks from 2G to 5G and beyond. Our products are not just components, they are backbone of telecom towers and public safety networks, ensuring seamless connectivity and reliability for millions of users worldwide. With a portfolio of over 27 products, including RF repeaters, active DAS system, and antennas, we have established ourselves as a comprehensive solution provider in the RF equipment domain. Our dedication goes beyond products. We offer end-to-end solution and encompassing in-building coverage, planning, design, and installation for mobile operators. We are also proud to announce the successful launch of our interference mitigation system, showcasing our commitment to leading the way in providing superior telecom services. Looking at our performance, revenue from operations increased by 7.6% from 334.01 million rupees in Q1 financial year 24 to rupees 359.44 million in Q1 financial year 24, led by robust execution of orders. EBITDA stood at rupees 28.31 million in Q1 financial year 25 compared to rupees 36.39 million in Q1 financial year 24. Margins stood at 7.88% compared to 10.89% over the same period. The compression in EBITDA margin is attributed to increased hiring to meet the demand for our upcoming services. PAT stood at rupees 11.75 million in Q1 financial year 25 and PAT margins stood at 3.27% during the same period. Frog Cellsat Ltd's order book stands at impressive rupees 810 million at closing of Q1 financial year 25, reflecting strong client confidence in our capabilities and in our ability to deliver high-quality, innovative telecom infrastructure solutions. The diverse and extensive project pipeline provides a solid foundation and sustained revenue growth in the coming quarters. Looking ahead, our growth is driven by rising demands for in-building coverage and expanding opportunities in mobile coverage solutions, particularly DAS, as greenfield airports and metros alongside 4G to 5G upgrades. Increased spending from third mobile operators, deployment of VHF coverage for railways, and interference mitigation solution in operator network further bolster our prospects. These initiatives are reinforced by the Make in India initiative and national security product requirements, aligning perfectly with Frog Cellsat's core competencies and positioning us for substantial benefits. Now moving on to business update, we received an LOI from L&T Technology Services for designing, manufacturing and supply the IBS systems for Bangalore Metro, valued at approximately rupees 9.4 crore, to be executed within financial year 24-25. We have also received an LOA from ACES India Private Limited for the design, manufacturing and supply and services of an active glass system for Noida International Airport. It's a significant deal also to be executed within financial year 24-25. In conclusion, FCL's future looks promising as the industry undergoes significant capex growth, and we will contribute to this with our innovative products. We are well prepared to capitalize on the numerous growth opportunities ahead and are confident in our ability to expand our operations while delivering value to our stakeholders. We extend our gratitude to our board, management, employees, partners, and shareholders for their unwavering trust. Together, we aim to deliver solid performance and reliable growth for FCL. Thank you for your time, and I am happy to answer any questions you may have. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have any questions, please press star and 1 on your telephone keypad, and please wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. We will wait for a moment while the question queue assembles. Our first question comes from Tushar Ragatate from Kamakhya Wealth Management. Please go ahead.
Yeah. Hi, sir. And thank you for the opportunity. So just wanted to know, you have front-loaded the cost in terms of employee expense. Just wanted to know how you're seeing the FY25 going forward in terms of margins, and how are you seeing the order pipeline going forward? Yes, sir, that should be my first question.
Right. So, Tushar, thanks for the question. I'm sure several of our shareholders are looking for answer to this question. So look, we are what we have been doing for this quarter, for Q1, as well as we started this from Q4 last financial year. That we are building up really our team for the services as well as production to cater to the new upcoming requirements that we have. That we are seeing that the orders are already there, and we are expecting few other large orders. To cater to those requirements, we are building a team. So, and that's the reason why you see in the results, the product margins are intact. The cost of employees have gone up, and that is basically a build-up to deliver new services and products for the business which we have in hand and which is upcoming business. We are expecting a growth of about 30% in this financial year 25 from last year. And we are expecting a EBITDA margin of around 15%. Further, there is a potential upside of another 10% growth if we manage to get few of the deals, large deals which we are expecting.
Got it, sir. So this guidance is coming from any soft order booking, or there are yet to be ordered, yet the orders are to be confirmed?
Tushar, we get orders on quarterly basis. So there is a regular operator business that we have. That's one thing. So there we are seeing nominal growth of about 20%. Which is going to be there. Then, in addition to that normal business growth from the operators, we are expecting, we already secured 2 projects. One is BMRCL, that's Bangalore Metro, through L&T. And the second project is for Noida Airport, through ACES. So this is a totally new business, which is a upside for us from the new business. We are expecting couple of more projects coming our way in the short term, maybe within this quarter, which will be again delivered within this financial year. So those are again going to be a new business for us. So this is new business. Further, we are seeing upside coming in from the third operator with the funding in place, with their plans for expansion, expanding the network. We are seeing the business growth from there, a substantial business growth. So this is the short term of for this financial year growth which we are expecting to come from.
Yeah. So why am I asking? Because historically your guidance was trimmed by half. So just wanted to know, like, what sort of risk are you seeing in terms of your guidance, your FY25 guidance?
Right. So Tushar, see what happened last year. We initially have given guidance of 40%, which curtailed down to 20% later, and we managed around that. So why that has happened? We were expecting these projects which we have secured now in Q1 this year, BMRCL and Noida Airport. These projects we were expecting in the last financial year, which for some reasons got delayed and finally came in Q1. Had they happened last year, we would have definitely hit our 40% target. We missed out on that 40%, and we have to curtail our forecast from 40% to 20% is simply because of that reason. But now those projects have come, so they didn't contribute last year in last year's financials, but this year they are contributing. And then we are expecting a couple of more projects closure within this quarter, which will take us to this target which we are mentioning.
Fair enough, sir. I will get back in the queue.
Sorry?
I will get back in the queue and ask after some time.
Okay. Right. Thank you. Thanks, Tushar.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from Rohan Patel from Turtle Capital. Please go ahead.
Hello. Yes, sir, I have a question regarding, sir, the growth you are talking about 30% that you are going to experience this year, plus additional 10% growth you are saying. So how much that would be from our new portfolio of goods and services that were not provided last year?
Right. So look, when I say new growth or new market, new business, is something what we are doing currently with the operators, which is a routine business. That is our existing business, which gives us potentially a growth of 20%. And that additional 10% plus 10%, what I'm saying, is expected to come from businesses like Noida Airport is there, or BMRCL is there, or similar new projects that we are expecting.
Okay, so the order book that you are having right now and that you are expecting this year to come, you are expecting from that 30% growth.
Right. Right.
Yeah. And regarding one of your presentation, the opportunities that we can address, like we have couple of opportunities in 100 crore basket and many in 50 crores. So where are we right now? Like how many we can grab it in next 3 years or 4 years? Like how can we take it to like 500 crore revenue in next 3-4 years? And we have sufficient of opportunities that we can address. So I just want to understand the developments that are going on right now.
Right. So look, again, one, we are seeing a lot of growth coming from our DAS business, IBS business, because there are several new airports and metros which are getting built up, developed. There is a lot of stress on in-building coverage in large buildings for 4G, 5G. So that is one, we are seeing a lot of upside in that. Second, there is related to this. Today there is what you say regulation which is put by government on all the operators that any equipment that they are going to put in their network has to be national security certified. And that has changed a bit how the competition works. And that is helping a bit because we are national security certified as a company and our products as well. So there is a bit of headwinds favoring us in that direction. Another growth perspective we are expecting is coming in from our public safety products, which are Tetra coverage and VHF coverage, which is primarily for railway. Now VHF, again, VHF product is there, but it is in the approval process. And railways RDSO approval process takes a bit of lengthy process. So we expect that to start adding to our revenues from later this financial year or maybe next financial year. Additionally, we are investing in FMC line or EMS services, and that is further going to give us addition to our new business. And our interference mitigation solution is anyway there. We are just waiting for conclusion of the business on that. That's another growth area we have.
So do you have any order with interference mitigation system? Because this is something that we have developed indigenously over here. So do you have any progress over there? Because that could be a big opportunity.
Right. So still things are on pause on that. We are waiting for operator to conclude a deal. It is getting included in part of some other bigger network deal which they are currently negotiating. So we are waiting and watching. So far there is no order to answer you, but it is expected sometime soon.
Okay. And like before we said that we won't be getting like your back in TRHP, that manufacturing service like TMT line is not margin accretive product, and now we are wanting to get into it. There are a lot of players already in TMT SMT line. So why do we think like we will be making a progress over there?
Right. So there are two things to this. One is we anyway for our products also we use SMT line, so for which currently we outsource it to a third party. So we have in-house requirement for that. Second is when you look at manufacturing as a service, you go out to seek customers for that. Their first primary requirement is that if we have SMT line or not, can we do SMT process in-house? So if the answer to that is no, then that business opportunity drops out mostly. So if we need to do something on the lines of manufacturing as a service, SMT line is a kind of must. Then third thing is...
Yeah, please.
Yeah, please go ahead.
Yeah. So I'm asking, the SMT line that you are talking, will that be used captively for our other products, or you are going to help outsource people do that? Like, you are going to get contracts for manufacturing those on that line?
So my first objective is to use it for our in-house work. And whatever spare capacity, if at all, will be there, we plan to use it for third party. That too, not for just the PCB assembly work, but to manufacture boxes, complete boxes, units. And I was telling you the third point. The third point is, we are already PLI recipient, and now government is checking with all the PLI recipients if they are interested to enhance their investment limits, which will obviously enhance the incentives also. So, with that, if that is going to happen, we are going to make this new additional investment as part of PLI, which will give us incentives as well.
Okay. So, let's say...
Rohan sir, I'm so sorry to interrupt you, sir. Could you please join back the queue for more questions?
Sure, okay. Okay. Thank you, sir, for answer.
Thank you so much, sir. Our next question comes from Shikhar Mundra from Vivog Commercial Limited. Please go ahead.
So, wanted to understand, for the growth guidance we are giving, are we expecting H2 to be significantly better than H1, or we are assuming all the 3 quarters to be roughly contributing the same?
We expect ramp-up to start from Q2 itself, but H2 is going to be definitely much more significant, better than Q1 and Q2, H1.
So we are expecting like quarter-on-quarter growth, Q2, Q3, Q4?
Yes.
Okay. And so we are guiding for around 30% growth minimum, not assuming the extra 10%. So that's like a revenue of 205-210 crores.
Right.
And we have right now an order book of 80 crores. So what gives us the confidence that we'll be able to win more orders worth 100 crores during the year? I mean, which areas are you seeing, and what gives you the confidence?
Right. So as I said, our normal business is with the operators, mobile operators, is seeing nominal 20% growth, which is there. We have already signed rate contracts, because signing rate contract is an annual process which they have. So they have already, for this financial year, they've already signed rate contracts now. So that is one confidence which we have to achieve that nominal growth of 20%. Further, these 2 projects which we have already announced, BMRCL and Noida Airport, they themselves are about 30 crores of business, which we will be definitely billing within this financial year. So that makes it almost 10% growth, right? And then we are expecting few large projects more for airports and metro.
Okay.
That's how it is.
So the growth 30% is excluding these airports, the Noida and BM.
No, that is including the BMRCL and Noida, yeah.
Okay. And so I mean, what kind of competitive intensity is there for the Noida and BMR? Like, how confident are we of getting that 30 crore order from there?
No, order is already there.
Okay.
Order is already there. We have to just execute it.
Okay. All right. And for this, let's say whole year we do 205 to 110 crores. So roughly, like, what will be the breakup between the different products?
Look, we generally don't provide the breakup as such.
Right.
But broadly, broadly, if you look at it, then in 205, we will be doing about 30 crores of services.
Okay.
About 40 to 50 crores of projects, DAS projects. And remaining is going to be our normal business, which is IBS accessories and network accessories and antenna.
Okay. And the current order book of 80 crores, like, is it possible to give a breakup? Like, what all is there in that?
We usually don't do that. We are still a very small company, doing 157 crores is very small, to make out, thin lines from that. Doesn't make that sense and gives a lot of exposure for the competition to use that data. So we avoid using it.
Oh, and so where are we with Jio? Like, we have, I believe we have onboarded Jio as a customer, if I'm not wrong.
Yes, you're right. We have Jio as a customer.
And how big a business would Jio? Is it possible to share details about how big? How fast are we scaling up with Jio?
It's a scaling up. We'll not be able to share a lot of details here because of confidential reasons.
Sure.
Yeah, we are doing strong with them. Yeah.
Oh, sure. Okay. Thank you, and best of luck. Join the queue back.
Thank you.
Yes,
Thank you, sir. Our next question comes from Santosh Kundapuram from Investment Handle. Please go ahead.
Hi. Thank you for the opportunity. Sir, I have a question regarding the telecom sector business as such. So as your clients like Jio and Tejas Networks, they are growing at a very rapid pace. So definitely looks like there are certain tailwinds in the industry. Can you please enlighten us with, what are the, in summarized form, what are the tailwinds you're seeing in the sector? Because your vendors or your customers are growing, so I'm anticipating you will also obviously grow with that effect. If you can throw some light on that.
Right. So Santosh, yes, you're right. A lot of investment happening in this sector already. Although if you see on the 5G level, as of now, there has been pause. Operators have invested on the outdoor sites, whatever they need to invest. There is a pause they are taking, most of them. But what they are doing now is they are now looking at indoor coverage. And they are very particular about that, and they are investing now in the indoor coverage. And that's where we come into picture. So we are seeing a lot of growth coming in that segment. Yeah, so that's where we are.
And is it like repetitive business or is it like one-time product that you sell for these customers?
So see, one side, let's say, we are talking about Noida Airport. So Noida Airport, once we deploy the equipment, it is good to go for next 10 years. Unless there is in between, there will be, some 6G upgrade will come, so we'll have that upgrade option in between. But majorly investment will be done in one time. But, okay, Noida Airport right now, we have got is phase 1. Okay, similarly, there are going to be 6 different phases for Noida Airport itself, which is going to be happening over next 3 years, 4 years. So similar type orders we are expecting as repeat orders for different phases of Noida Airport. So this is on the expansion side. And there are new airports which are coming, which needs this equipment. Something like, just for example, Navi Mumbai is one airport which is going to come, which will need such equipment, right? And there are several others. There is plan for almost 150, 200 new airports to be built up. Each one of them will need system. So yes, so there is a lot of expansion, a lot of potential there.
And how about this VHF and IBS on the railways or the metro sites? Like, can you explain what is the VHF product that you are trying to build?
Okay. So there are, one is cellular network or mobile coverage that we all know we use. In addition to that, there are different other networks. One is Tetra network, which is there. Tetra network is used by mainly police, wireless, fire safety, ambulances. They